Welcome back to Let's Invest with the ASX. In this video, we will cover the following topics. Types of securities, rights and bonus issues, market announcements, ticker codes, and more. Types of securities. Shares come in various types, and understanding their characteristics is crucial for making investment decisions. Different types of shares traded on the ASX have distinct features that can greatly impact investment strategies. Ordinary shares. Most shares on the ASX are ordinary shares. They have no special or preferred rights and typically grant shareholders the right to vote at company meetings. Ordinary shareholders can receive dividends or assets upon liquidation on an equal basis with other ordinary shareholders. Preference shares. Preference shares give their holders priority or preference over ordinary shareholders for dividends and payments upon liquidation. Different types of preference shares have different characteristics and rights. Holders of preference shares usually have restricted voting rights that depend on the terms of the shares. Trust units. Trust units are popular in the form of property trusts, equity trusts, and cash management trusts. Unit holders have less control compared to shareholders. Trust units are similar to ordinary shares in terms of investment, but instead of dividends, unit holders receive a full distribution of profits. Stapled securities. A stapled security involves owning two or more related securities through a single vehicle. Typically, a stapled security consists of one trust unit and one share in a funds management company that cannot be traded separately. The trust unit holds the portfolio of assets, while the related company carries out the funds management and/or development opportunities. Partly paid shares. Partly paid shares are issued without requiring full payment of the issue price upfront. They can be useful for infrastructure projects. The company can call for all or part of the outstanding issue price at a specified future date, and shareholders are legally obliged to pay the call. For no liability companies, the shareholder may either pay the call or forfeit the share, and there is no requirement to specify the date of the call. Partly paid shares on the ASX are identified using a 5-letter code. The code includes the company code and a 2-letter suffix, typically ranging from CA to CZ, excluding CP. The purpose of the code is to uniquely identify the partly paid shares traded on the ASX. Holders of partly paid shares typically have the same voting and dividend rights as ordinary shareholders, except that their rights are proportional to the amount paid on the share. Retail investors trading in partly paid shares are required to sign a client agreement with their broker. The client agreement is meant to ensure that investors understand the risks associated with trading in partly paid shares. Bonus issues, also known as free shares, involve the distribution of additional shares to existing shareholders in proportion to their current shareholding. This distribution is usually done as a way to reward shareholders and boost investor confidence in the company. One of the reasons for a bonus issue is to distribute accumulated profits or reserves to shareholders in a tax-efficient manner without paying out cash dividends. By issuing bonus shares, the company can retain its cash reserves for future investments or expansion. Additionally, bonus issues can help increase the liquidity of the company's shares by reducing their price per share. It's important to note that a bonus issue can lead to a drop in the share price, as the market price gets diluted in proportion to the increase in the total number of shares. To determine eligibility for bonus shares, there is an ex-bonus (XB) date, which is the date after which investors who buy shares will not receive the bonus shares. Rights issues allow existing shareholders to buy additional shares in the company at a discounted price without incurring brokerage fees. The purpose of a rights issue is to raise funds for expansion or to repay debt. Shares are offered on a pro rata basis, typically with a ratio such as 1 for every 4 shares owned. Shareholders can purchase additional shares at the discounted price based on their existing shareholding. Rights issues can be either renounceable or non-renounceable. Renounceable rights can be sold by shareholders on the share market if they choose not to buy additional shares themselves. Non-renounceable rights, on the other hand, are only available to existing shareholders who must either accept the new shares or forfeit the rights. To participate in a rights issue, shareholders need to complete a form and submit a check for the number of shares they wish to purchase. This form is submitted to the company's share registry, and there are typically no brokerage fees involved. Companies may offer a slight discount to the market price or a predetermined price to incentivize shareholder participation in the rights issue. Market announcements play a crucial role in keeping investors informed about relevant information that could impact share prices or investment decisions. Under the ASX's continuous disclosure regime, companies are obligated to disclose any information that may affect share prices. These announcements cover various aspects, including a company's prospects, growth strategies, and financial reports. Active investors rely on market announcements to stay updated and make informed investment choices. The ASX website provides a centralized platform where investors can access all market announcements, reports, and financial statements. Additionally, the reporting calendar on the ASX website helps investors anticipate routine announcements, such as annual reports, by providing relevant information about their timing. Ticker codes. Every tradable instrument on financial markets has a unique code that identifies it. These codes, known as ticker codes, are displayed on ASX ticker boards and in newspaper share market tables. Ticker codes are crucial for tracking instruments through trading, settlement, and price reporting systems, ensuring efficient and accurate identification of securities. When placing a trade order, it is necessary to know the specific ASX code for the instrument you want to trade. Most ASX-listed companies have a 3-character code that represents the company, and all securities issued by that company incorporate that code. This 3-character code is commonly used for the primary issue of shares by the company, as well as for listed investment companies, AREITs, infrastructure funds, and conventional exchange-traded funds. Other securities that aren't the primary issue of shares may use a different length of ticker code to indicate that there is something different about them. For example, during a capital raising through installment receipts, Telstra's fully paid ordinary stock is known as TLS, while Telstra's shares traded as installment receipts were represented by the code TLSCA. The addition of a 4th character in special condition codes further distinguishes specific circumstances or product types. ASX uses special condition codes to indicate unique situations. For example, ASXDA is the code used for deferred settlement basis trading, which occurs when there is a corporate action, such as a stock split, that requires additional processing time. Stocks trading with the ASXDA code will settle on a deferred date. ASXCA is the code used for partly paid securities, indicating that the holder is required to make an additional payment to fully own the security. The C in the code stands for contributory, highlighting the partly paid nature of the security. Listed companies can also issue interest rate securities, such as bonds and hybrids, which have their own coding conventions. These codes typically consist of a 3-character issuer code and a character to identify the type of security. If a company issues multiple series of the same type of security, sequential alpha characters are added to the code to differentiate between the series. Exchange-traded products, ETPs, including ETFs, managed funds, and structured products, also have ticker codes. The length of ETP ticker codes can vary, ranging from 3 to 6 letters. Share price indices, such as the S&P ASX 200 index, also have their own 3-character codes. The same code, XJO in this case, is used for exchange-traded options and warrants over the index, allowing for easy tracking and analysis of index-related instruments. The ASX website provides comprehensive information on coding conventions, including principles for allocating codes to products, as well as a useful lookup tool to find codes for companies and financial instruments. This ensures that investors and market participants can accurately identify and track the instruments they are interested in trading or monitoring. Thank you for watching our video on investing with the ASX. We hope you found it informative. Remember to use the flashcards provided to reinforce your learning. If you enjoyed this video, please consider liking and subscribing to our channel. We appreciate your support. Stay tuned for more content, and happy investing!